The Taxpert Car Planner 2023 is a quick and easy way of advising clients on the tax and national insurance consequences of the different ways in which a car for business use could be provided. And you can see on screen the main input sheet where the yellow cells, as usual, are the ones that you can enter. So we've got here company name, HMG Limited, employee's name, J Hunt, and then a drop down for are they higher, basic, or even top rate taxpayers. That'll change the profit extraction rate, the dividend tax rate. There you can see 38.1%. Their basic is only 7.5%, which feeds into the owner managed business calculation, and then the amount of business mileage and private mileage that we estimate, and then the appropriate corporation tax rate, which could be the small company rate of 19%, or it could be the main rate of 25%, or it could be the marginal rate, that's for you to decide, of 26.5%. Let's leave it at the small company rate. And then on the right, make and model of the car, registration number, list price, cost of accessories, CO2 emissions, and fuel type. There's a drop down for that. Is it petrol? Is it RDE2 or Euro 6 diesel? Is it old diesel? Is it hybrid? Is it electric? And here I've got hybrid. And if it is hybrid, then you need to enter the electric range in miles. So how many miles can it do? Because that will affect the calculation, for example, for benefits in kind. And then if it's a pre-owned, as they like to call it, car, date first registered, although because the system gets more complicated, I'm only allowing cars registered since 23rd of March 2006. And then other details, is there a capital contribution from the employee that'll affect the benefit in kind calculation? Is there an annual payment for private use? If it's property set up, that can reduce the benefit. Is there a fuel benefit? Drop down yes or no. Is there a car allowance? Because there could be an alternative. We'll see later the break even button, which is quite useful. Is there a salary sacrifice or optional remuneration allowance arrangement? Yes or no, because that can affect the calculation. Insurance costs and other maintenance costs. And then on the right here, depreciation rate for the company or the unincorporated business, number of years you're likely to have the car, maximum 5. The start date, I've pre-entered 6 April 23. And have allowed in this version cars that are provided between 6 April 22 and 5th April 24. In other words, starting this year or last year or last tax year, and that enables us to use it for planning purposes for those 2 years. Net present value discount rate for looking at the effective net present value, and then if we're looking at a personal contract plan, amount of deposit, which then based on the list price will feed into the monthly payments, and based on that and the depreciation rate will give a guaranteed minimum future value, and we can put in a supposed interest rate, and then if it's being bought outright, the amount that is financed, if any. And then finally, a new development towards the end of last year, if it's an owner managed business, you might want to look at what the consequences would be if it's an operating lease. So again, a toggle yes or no for that. Now, with those figures already put in, we can go straight to the comparison tab, which at a glance gives the details for the 5 years in question for the choices that we've made. And you've got the possibility in this column of an outright purchase. So you can see that if the individual were on the conditions that have been set out on the input page to buy the car outright, then overall the net present value would be 7,916. I think I must have had a 0 or 100% NPV rate there. And then the average monthly cost 132. Whereas if it was a personal contract plan, not surprisingly, that would be more expensive. But if it was a company car, then we've got the total costs, but broken down into costs for the employee and costs for the company. So at a glance, we can see on this particular example that the outright purchase is going to be the best option on these conditions. Now, I can see there that the NPV discount rate was indeed 10. If I change that to 25%, say, take a rather harsher view of the time value of money, that changes the net present value figure. And that does actually then mean that it's slightly more expensive than the equivalent if we were taking a personal contract plan, but still a lot less than if it was a company car. The average annual cost and monthly cost figures haven't changed because those are based on the actual figures rather than net present value figures. So playing around with the data, you can see how the figures are brought together. And then we have the reports for the client. And if we're looking at an owner-managed business, it could be a sole trade, in which case you've got the sole trader summary there. Or it could be an owner-managed company, in which case we've got the details there for the company and for the director shareholder. We've also got a key results tab, which can be quite useful. And I myself find it useful as a sensibility check. That sets out some of the key figures: the car benefit, the fuel benefit, if there is one, the capital allowances, and also the vehicle excise duty, which is an increasingly important part of this, as we'll see in a little while. So those, 4 tabs are the main ones after the input one. But just going back to the comparison, if I toggle the OMB from yes to no, instead of looking at the proprietor either of a sole trade or of their own partnership or company, if I toggle no, I'm then looking at an employee, basically. And the choices there are between the employee purchasing the car outright or having a personal contract plan, or the company providing the car and the employee being taxed on the benefit in kind. And the reason why I've got savings on the first two is because with the relatively high mileage that we've got here, business mileage of 20,000, the employee, I'm assuming, will be claiming the authorized mileage rate if they provide the car themselves. If I were to drop the business mileage to 2,000, then on the comparison figure, I would expect to see those brackets have disappeared. And indeed, it's become a lot more expensive for the employee to provide the car themselves because they're not getting that authorized mileage rate. So you can see at a glance there how the different figures that you put in to the input screen are going to affect the output. But then we've got the employee report, which is simply formatting the figures that we've already got in the comparison. And we've got the company report, ditto. Key results again, and yeah, nothing really to add to that. Although I suppose before looking at the secondary worksheets, I'll just go back to the input, and let's suppose I put the list price up to £125,000, and let's make it an electric car, so 0 emissions, and instead of hybrid, it's wholly electric. And let's get the electric in there. So the mileage figure becomes irrelevant. And let's suppose it's not one that was, so what I need to do is delete that. So it wasn't pre-owned, as it were. So we've got a brand new car coming in this tax year. I mean, you can put whatever date you like within this year and last year. And let's go straight to the key results figures, because what I wanted to draw your attention to there was the effect on the vehicle excise duty or car tax. So that wholly electric car, at the moment, for this year and next year, there is no car tax, but from April 25, look at that, 570. So that is quite a significant figure. And at the same time, of course, the car benefit is going up. At the moment, it's 2%, but it's going to go up to 3%, 4%, and 5% over the next, well, from 25/6 onwards. So that is significantly increasing the car benefit and the cost either to the company or the individual of the vehicle excise duty. And that's probably as much as you need to know in terms of input and output. But as with all of my apps, we've got quite a lot of workings that I can show you. The data is just ridiculous, but if you want to check that I've got the right percentages and so on, that's all there. The loan payment schedule is if there is an amount financed, and that sets out the finance outflows that would happen. But the main workings are the personal cash flows, So that'll show us how we get to the figures in terms of each year's capital, running costs, tax, and other payments, and similarly the company cash flows. And there it is. So a very complicated spreadsheet, but the intention is to give you a simple input screen, which then enables you at a glance to advise a client. And well, for here, I would say it's fairly obvious that wholly electric car should be a company car. It's a no-brainer there, compared with the costs that we've got if it were, in fact, that's if you're not an owner-managed business, of course. If you're an OMB, it's not a no-brainer. But I can see there that actually, yes, having it through the company is the cheapest way. I wonder if that explains why Absolute Accounting Software's directors, 3 of them, have wholly electric company cars, and they don't own them personally. It's because of those figures at the bottom. Well, that's it. I hope you'll find that useful.